Hello, everyone. Thank you for joining us. I'm just going to continue letting the new people that are coming in know that we're getting set up. Bear with us for a few minutes. We have a large group joining us, and we're probably about a little over, maybe 2/3 of the way there.
I don't know how to get it off my screen.
Okay. So I think that in respect to our panelists, that we should start this event. And so I'm going to roll it off. Welcome, everybody. We're very excited to start off the new year with this amazing event. We have topics to discuss that will enlighten and fascinate you about diversity and affordable housing and politics, especially given politics and exiting the pandemic and then things like corporate and personal giving. To initiate this conversation, first of all, I'd like to let some of you know we had a last minute that Dave Stevens was unable to moderate this session. And he had suddenly had to go to Germany where he's receiving treatment for cancer. And in honor of him and all of the support he's given to our organization this year, I'd like to suggest the possibility that people would like to donate to Johns Hopkins Cancer Research in his name. If you haven't seen in LinkedIn his link for that, we'd be happy to share it with you. And then I would like to thank every single CEO and companies for supporting this, from Guild and Terry Schmidt to New American Funding and Patti Arvielo, to Caliber and Sanjiv Das, and to American Pacific Funding, Kurt Reisig. So thank you, everybody. And what I didn't mention, forgive me, Rosemary, who willingly last minute took over moderating this event. Rosemary has stepped in. So you all know Rosemary David Great from the Pacific Northwest. And thank you, Rosemary. It's all yours.
Sure. It's an honor for me to get to moderate today. Lisa, thank you. As she noted, I'm here as your chair of the WMBA board for 21 to stand in. By day, I'm a EVP in retail for Homebridge Financial Services. And I just want to say, congrats and thank you to Lisa Goldsmith and our events committee for just through this COVID season, bringing our landscape and our team in the Northwest, just such great virtual events. And certainly today with the lineup, she has raised the bar even further. It is not often that we would be able to get 4 key executives away from their busy leadership schedules like this. So to all of them, we are grateful and thank you and kudos to all of you that have taken time out of what we know are really busy schedules right now to take time to learn and glean from these leaders. She has referenced the panelists that we have with us today, Kurt Reisig, who is the chairman of American Pacific Mortgage, Patti Arvielo, who is the president of New America Funding, Sanjiv Das, who is the CEO of Caliber Home Loans, and Terry Schmidt, who is the president of Guild Mortgage. I think it's important to note that we have attached their bios, their in-depth bios, on the announcements and the registrations. And in the interest of time, we're going to get right to topics today, so we have enough time for all of them. But we highly encourage you to take a look at their bios because they have unique backgrounds and unique companies that they serve that bring some of the perspectives that they'll bring to you today. All of them considered thought leaders within our industry. And though they serve platforms that are of various shapes, sizes, structures, or various channels that make up their companies, they all have very strong reputations in the retail divisions and the markets that they serve, which is near and dear to the heart of the audience that's here today. So let's get started on the topics. The topics we took from the board and from surveying many of you from the front line. And then the panelists were kind enough to give us some time last week to come together to discuss those topics and the best approach for today. So we're going to start with a topic that seemed to be near and dear at the forefront of the sales associates on our call, right? Certainly 2020 was a year of unusual, unprecedented circumstances. Like we had historic volume levels and record profits. And underneath that, we had just a host of variables, right? From figuring out how to manage the capacity to determining how to manage remote work environments and the customer service aspects and lending aspects of a COVID environment to managing the elements of market product dislocation and forbearance and all the various, things coming into play. And when we look at our industry, one of the things that we feel is fascinating about it is the level of variability through the cycle. So last year did not disappoint, and it always seems a little more fascinating when we get to look at it in the rearview mirror, for sure. What we want to take time on today for the audience is what you were calling to us about was the look forward, and the look forward to the future of 2021 and maybe the immediate years behind. There were three kind of key areas that were coming up in questions. So we're going to take it in one larger question for each panelist to address in terms of what they feel is most relevant. The first area was just the future of interest rates, and housing supply was coming up a lot topically in terms of what these leaders foresee for 2021 or the years beyond for the impacts of those things. The second area that was coming into play was just post-election. If there are things that these leaders feel are likely to be impacts from the new administration influence or the changing of the guard and the leadership at the CFPB. And then the last one was, hopefully we're moving past pandemic in 2021, but all are starting to really talk out loud about, the new norm that will be after this pandemic season of that we may be forever changed a little bit, certainly as people and as how we approach our businesses, since a lot escalated in the current season. So I'm going to toss off to Terry for her to take the lineup on this. And Terry, please feel free to weigh in on any and all of those topics as you see kind of most relevant for the group. Thank you.
All right. Thanks, everybody, for being here today. Wow, you had 4 different parts to this question, so hopefully I get them all. First, on interest rates. We at Guild typically look and follow the MBA forecast when we're looking at interest rates. And the MBA is saying the interest rates are likely to increase by the end of the year about 40 basis points from the end of this year. But it really is a mixed bag. If you look at Fannie Mae's forecast, they in December, they had come out saying the interest rates were going to stay almost identical to where they ended in December. So it really does vary, but we typically have followed the MBA forecast, and the change in our volumes for last year, for example, through third quarter, we were almost identical to the MBA change in volume increases year over year. So it's worked out pretty well for us. Housing, I think everybody believes that housing is still going to remain strong for this year. It's going to be a decent year, good year actually. But the big unknown is the housing supply. The last I noted that nationally the housing supply was down to 1.3 months, the amount of housing out in the market, and usually it's about 2.5 months, and that's even a tight market. So that I think is the unknown, is how that's gonna play out. Post-election, I think with this sweep of the Democrats, that the GSEs are going to remain a critical role in housing, and it was like 80% of the overall volume was through the Fannie and Freddie last year. So I don't think they're going anywhere. This exited conservatorship, I think, is not going to happen. So I think we're on good footing there. But I do believe that there's going to be more emphasis on fair housing and serving the underserved. And I think that the government's going to continue to be focused on redlining and fair lending. So we have to, be cautious there. And they really want to support that first-time home buyer and minority lending. So I would expect that that's going to be a big focus. With this new CFPB nomination, looks like we're still headed for, continued enforcement and rulemaking and supervision going forward. But the good thing here is that I think we did a lot of work in our industry since the Great Recession to today, as far as supporting consumers and doing what's right for our customer base. So I think that that's good for us. And I don't think it's going to be a crazy change with the CFPB. We're on good, solid footing as an industry, and I think that's good. As far as the exiting the pandemic, the CFPB, I think, will be focused on how are we serving those customers that are getting out of forbearance if we're servicers, and that's going to be key. And then, of course, the redlining, they're already pretty well getting more and more focused on redlining, so it's something to keep in mind. The hybrid business model, I think, is the future. I mean, today we've got 80% of our workforce working remotely, and like everybody else I've talked to, it's been working. And it's amazing what everybody has accomplished in a year where people weren't working in the office. And so everybody's proven that it can work. So I think we believe that there's going to be more of a hybrid business model going forward, and to be open to it. And frankly, I was one of those old school, you got to be in the office and to be in touch with everybody. And really, honestly, our engagement scores at Guild were actually better this year. And I think it's because we focused so hard on, keeping in front of our employees. And I think this move to suburbia is going to continue because of that, because people are deciding that they want to live in urban areas. And so we're seeing that, and I think that's going to continue. I think, going into 2021 is really evaluating opportunities. Don't stop evaluating opportunities. I think this last year we couldn't, because we were just handling the volume, but getting back to the competitive landscape, and how do we recruit new people? How do we continue to invest in the people that we have? Looking at, recruiting M&A opportunities, investing in technology. Those are all things that we kind of have to get, continue to keep doing and to be relevant. And so that's kind of what we're thinking. Human interaction, I think in this business, it's who we are. We are a financial services business. And so, that human interaction is not going away. It's just there's going to be more use of technology to support that. We're going to be doing more with less, but still people are, I think, key. Did I get it all?
You did great.
Yes, you did great. And thank you for all of those perspectives. I'll toss it from here to Sanjiv. If you want to share, Sanjiv, your thoughts in general of what you feel is most relevant.
Thanks, Rosemary. And I don't have that much left to say after Terry's pretty comprehensive views on topics that I think pretty much aligned on completely. But first, before I go too far, I want to wish my friend Dave Stevens all the best. And I do hope that we can all step up and do the right thing for a leader who did a lot of right things for the industry. So thanks to him, and thank you to Rosemary for stepping up. So yeah, a couple of things. Look, I look at it in terms of essentially 4 constituents: the consumer, I look at it in terms of regulatory, I look at it in terms of the industry itself, and then the broader sort of public policy makers, as in Fannie, Freddie, and so on. As Terry rightly pointed out, it does seem like, I mean, you asked the question, you set this up by saying, let's not look at the rear view mirror, let's look at what's out there ahead of us post-COVID, post-elections. I think there are a couple of things that are here to stay. I think both consumers and employees are going to demand a greater use of technology. I think the technology was pretty much always there, but the use of technology really kicked in the last 9 months. And I think it is fundamentally changing the way people think about work, and it's the way people think about interactions. And it's, I believe, a move in the right direction, which will truly help bring work-life balance back in our employees. I actually don't know what that means anymore. But I think the use of technology is going to become increasingly more important. But I will go back to a very important point Terry finished with when she said we are a human interface business. I think that Wall Street tends to get consumed with technology and forgets that this is actually a very high human interface business, and that her business and our business, which has a large proportion of retail and wholesale, is fundamental to the importance of a very high touch business, where it's not about just giving consumers a new loan, but it's really making sure that we help them stay in that home through good times and bad times. And this economy has shown kind of a polarization of the economy. I'm not talking about wealth here. I'm talking about those that have been done extremely well in a great mortgage year, for example, in 2020, but those that have been incredibly badly affected by the crisis through unemployment and furloughs. And I don't think that even as an increased stimulus is going to solve the problem of employment that quickly. So we all have to be very careful, not just about growing our franchise.
Did they decision alone?
Jennifer, you may need to put your phone on mute. Not just about giving people a new loan, but also helping people stay in their homes. I think that's really important. I think the shift of urban to suburban, high tax cities, high cost of living, I think that is a semi-permanent shift. I think that people are realizing that the suburbs in America are extremely well equipped to handle technology, and that living in intense cities like New York, as I do, and San Francisco and LA, as opposed to the suburbs, can actually be can come at a cost. And so I think particularly in terms of the intensity as well as the taxes and cost of living. So I think people are actually going to fundamentally, I think those are shifts. And what does that shift mean? That shift means that the growth of purchase mortgages will continue to be strong. The problem is the growth of purchase mortgages is kind of stymied by the rise in house prices. But because the absolute level of interest rates is low, affordability still remains low. Now, our view as a lender is, look, interest rates numerically will probably stay low through 2021, but the yield curve will probably, steepen a little bit more, and the primary, secondary spreads will probably drop, which means in layman's terms, our margins will drop. And so the industry comes under some pressure. I believe that even if Fannie and Freddie don't get out of conservatorship, that because they will continue to strengthen their own balance sheets, that we have to be careful about the imposition of higher capital requirements on all of us at the same time that we are under pressure on margins. So getting the non-bank industry strong is a really important part in this turn. So I feel that's really important. And and lastly, I will say that, look, with the CFPB coming in and with the change in leadership and change in administration, I absolutely fully expect stronger consumer protection, both in terms of CFPB, but everything else that we do. And so we as lenders need to be particularly focused on making sure that we keep doing the right thing for consumers. So I would say that'd be broadly the additional things I would say in addition to what Terry just said.
Thank you for sharing. It's interesting for many at the front line, not thinking so often about the impacts of affordability index in general. And definitely, it's so valuable for our frontline employees to be able to have an appreciation for the structural aspects, certainly, that maintain the world of our business. Let me flip over to you, Patti, for anything that you feel is important for focus on in regards to the question and what's on your heart.
So, thank you so much for having me today. I actually enjoy listening to
Terry and Sanjiv, but I really feel like everyone on this panel is in the same boat, and we're really looking at the industry the exact same way. So I will not repeat everything that they said, but I will validate every single thing that both of them said. It was completely right in our perspective here at New American Funding. I think from a passion perspective, I've been very, very involved in affordable housing and access to credit and minority lending since 1994. So with the administration change, you know, there's a swing, and with that, the impact is to the consumer. So I have been, you know, trying to stay close to the Biden transition team, policymakers. I sit on the HUD advisory board. I'm hoping to stay close to the Biden housing team, as their focus is really going to be pushing on affordable housing and minority lending, which is something I've been doing for many, many years. But the overregulation is what actually hurts us. So my message to them is, you know, to overregulate the IMB model is not the way to make the impact in increasing homeownership in the LMI communities. It's with the overregulation where you can see, as you go back in years, the data and the homeownership rate to Hispanics and or African American declines with the overregulations. So there's a balance there between data and information and those of us that have been doing this type of lending for years. So I think the more of us as leaders of big companies stay close to the policymakers that are actually using these rules to enforce this is super important. So that's really just been something I've been doing the second that I knew that we were going to shift from one administration to the other. The philosophies are very, very different, and there's good and bad in both. But the fact of the matter is that we have consumer advocates now proposing to run the CFPB. We have a head consumer advocate, you know, second in command at HUD. So being at the forefront of the needs of the consumer, which all of us are, but especially the impact of the housing issues around the past, especially the past of redlining. I don't believe redlining exists today, purposeful, right? Every single one of us wants to do every single loan we can do. There isn't a mortgage company in the United States of America that doesn't want to do a loan for anyone, right? So my messaging has been redlining is the impact of redlining that we see today. It's the past that has dictated where we are today. You know, as I was sitting here yesterday reading all the quotes of Martin Luther King on Instagram and LinkedIn, I'm like, are we really talking about the same things? And I think that what's exciting about what's going on is that we as companies are going to be the change makers. And I think there isn't a company here again that doesn't exist that doesn't want to be the change makers, but it's around doing what's right, and then again, increasing the workforce to mirror the communities that we're trying to serve. That is the impact that I think that is proven in our model, at least, is when everybody's saying to me, how are you doing so many loans to Hispanics? Or it's because I have a large Hispanic workforce that's super focused and lives in the communities and serves those communities. The same with our workforce when it comes to lending in the African American communities. So again, it's how do we increase diversity in our platforms? It is homegrown. It is what we do at our company. We have a university. We're training about 100 individuals a month, totally green, either right out of college or right out of high school sometimes, that didn't even know that the mortgage industry existed. And it's a career that's not been spoken about in a positive light because of what happened post meltdown. It is like my life is what it is because of this industry. So to me, there's just a lot of positivity. And I think this administration will help all of us do what we want to do without restrictions. As far as affordable housing, again, something that I've been talking about for my whole career, which is this year, I'll celebrate my 40th year in the mortgage industry. Bottom line is that restrictions and overregulation, again, goes all the way down to the city level, right? So we cannot have affordable housing where there's zoning restrictions and where it's so expensive to build that these home builders can't come in and make a profit. Everybody has to be in business to make a profit. It doesn't work if you're not. So I've been advocating a lot for alternative housing removing some zoning issues that we have going in communities of color, where we can't even go in to change certain structures because of overregulation, to get the homeownership and the affordable housing units up. So it's just, again, us sitting at the table. But I actually find it exciting because this administration really finds something that I've been so passionate about so important. And I know every organization so wants to know, how do we do it? Well, it's with a unified front. It's with regulation that is working with the IMB model, because the IMB model does more loans for communities of color than any other lending model in the United States of America. We are the feet on the ground and the people on the ground serving these consumers. So we have to be very protective of our model. And so that's, to me, what I think that's really something that I've been working on, and I feel that is important to move the needle.
Thank you for sharing, and I always enjoy hearing your passion on that topic, Patti. Let me move over before we're going to shift to talk a little bit more in depth with affordable housing and the diversification of the workforce and leadership in general. Before we head that way, Kurt, I do want to make sure if there's anything that you feel that it was in your thoughts of, preparation for this. On the other topics in general, please definitely weigh in here before we kind of shift to that gear. Any thoughts you want to add?
Got it. Well, I'll just add a couple thoughts. It's fascinating to hear the comments from my peers, and thanks for that. And I want to hear what they have to say about more topics, so I'm going to be brief. I think we started this particular question is like, what do we see coming into the next year with rates? And with housing supply, and how's that going to affect our business? We saw rates spike up a couple of weeks ago due to the turmoil in DC. We now see them more or less settling back down. We feel that we look at the MBA's predictions, Fannie, Freddie, they all more or less mirror one another, that will be relatively stable early this year, and then probably see rates start to rise later on this year. One of the interesting theories that I'm watching is to what degree do we as independent mortgage bankers contribute to holding rates down as things become more competitive and our margins have to compress? So I think that's a real possibility that rates will remain in a relatively low pattern, even if the 10-year continues to tick up, because mortgage bankers in their quest to compete are going to have to lower their margins to sustain their volumes in these massive workforces that we've created. And so I think the prospect for rates staying low is really good. I think one of our biggest challenges is one of my peers pointed out is how low the housing supply is. It's even lower this year than it was last year, and it was bad last year. And so this robust purchase market is going to be the best thing about 2021. But we're going to have to get more creative about how we create inventory in the marketplace. And I don't think we have those solutions yet, but I think the industry is going to really have to rethink how the whole process of getting a seller to list a house and put it on the market is going to happen, because people are frozen. They're afraid they can't find a house, so they can't put their house on the market. How do we break loose this logjam that's being created in our business? I think that'll be the formidable challenge of 2021. It's not going to be rates. It's going to be, how do we solve this inventory problem? I think it's the biggest problem in housing today is the inventory problem. And I can comment about all the other things, but you know what? We're already halfway through our thing, and I want to hear more questions so I can hear more comments from my peers. So I'm going to stop right there.
Thank you, Kurt. And there's no doubt the supply conversation, with this being a predominantly Northwest audience, many of these markets are at days or weeks of supply. It's definitely on people's hearts and minds, finding the solution yet to be resolved, obviously. Let's shift then to the topic of affordable housing. It definitely, all of us, the panelists and myself, our companies have representation either on the MBA board, or we're on RESBOG, the Residential Board of Governors. Patti and myself and Dave Botany from that runs capital markets at Guild Mortgage on the Affordable Housing Committee. And it's been really interesting to me to see the level of energy around it that does feel different. Patti, I'll punt back to you since you've started on the topic. And I'll say, I was on a panel with you. I mean, it was probably 8-10 years ago now. And I remember being struck by your passion in the conversation that day on the panel, because it wasn't at the forefront of everyone's conversation and mindset at that point in time, a decade ago. And so I also think because of, you know, your background and the way in which you approached this industry, you have strong opinions on it because you led on it to kind of see what those loopholes are. And I know from the rest of these companies and your participation in those things, and also hearing some of your virtual conversations on it, that it's the same. You've spoken now, as you teed it up, about post-election and kind of the regulatory aspects of it. Is there more that you feel is valuable to add? We'll go to diversification of workforce in a moment, but is there anything more that you feel, you know, I think the front line often feels that, you know, just give me a more aggressive home ready or home possible product and I'm done, right? A lot of times they're not recognizing the risk burden in terms of the delivery of these loans, or the debate about overlays that then impedes the process. So I'm just curious, you know, since you're at the forefront of these committees and well underway, if there's anything more you want to add in terms of, you know, the nature of the prioritization of how to solve versus the regulatory space in it.
So thank you. Yeah, I'm very passionate about it. It's been what I've been doing for so many years. I find it so uncomplicated. And if you really look at how policies around how we're regulated looks and who sits around the table when they write the policies that we all fear, there's not one person from our industry at the table. So really the last few years I've been like, Elizabeth Warren, look at me. I know how to actually do a mortgage loan. I like major banks. I like IMBs. So, you know, really it's our voice being heard. It's challenging when the rules they write are what we're so fearful of. Listen, I will tell you, I share my data with the CFPB. I sat on their advisory board, and then when Cordray left, you know, we got dismissed by the new administration, but I stayed very close and I stayed a part of the CFPB advisory board. And everybody's like, why would you do that? Because I want to be part of the voice around the table. I will tell you, I did attend a meeting. There wasn't one IMB at the table but me. That can't be. We are critical to housing in the United States of America. The major banks play a role, the IMBs play a role, the broker plays a role. But the IMB has not been looked at favorably because of politicians that go around saying we created the meltdown, still 13 years post-meltdown. So I'm trying to change the narrative around what we do for a living. Every single one of us here, I'm trying to change the narrative. We are good. We're a great model. I don't need a new loan program. I have the loan programs to serve. Stop over-regulating us and stop making us scared to do a loan that has a propensity to default. If we're doing it right and they default, that's the biggest fear, is everybody's worried about that. But that's what happens in LMI communities. But we have to give them the chance to get in, because only a certain percentage of them that go into default. So, you know, really changing the narrative. And I think the more of us that get around that table, the more we are aligned with the Mortgage Bankers Association, which has been very favorable in my mission to serve these communities. Because anytime I felt like I'm pushing the limit, or even I've had issues with HUD, I have the MBA right next to me at the table. And so I just think the more that we align together as an industry with policy, we will see that we don't need a new loan program. I'm using the loan programs that are here today, and I do a large percentage of lending in these communities. My numbers in my servicing portfolio are not they're what the media is saying is way off of what is going on. There are certain communities where you will see an impact of I'll give you an example. Latinos, they will make their mortgage payment late, but they will always recover and try to regain and make the back payments. I mean, they don't go into foreclosure. There's certain, you just have to know the cultural nuances around when they get in trouble, they will ask family members to help. So I'm just trying to teach the policymakers around the cultural nuances in both communities, and they're very different. So I just really ask for the unification of all of us as leaders of big companies to really work alongside the policymakers. You know, Maxine Waters is a huge one. Elizabeth Warren is a huge one. Our new proposed new CFPB director is huge. So I think the more that we go around the table and show the data, like what I show them in our servicing portfolio, that when you do a large percentage of lending in the LMI communities and you do the right type of loans, it works. So that's really kind of what, I've been working on.
Thank you for sharing. And thank you too for the perspective we have a lot of frontline employees as well as leaders on the call today. And I think so often it's hard for them to feel anything other than, why is my company holding us back, right? Versus really understanding the complications underneath that are creating impacts for consideration. Kurt, let's move over to you on this topic. Any additional thoughts that you want to share from your seat and your perspective?
A couple. First of all, I really want to echo Patti's comments. I think the most important thing, particularly at this particular inflection point in the industry and in the political environment, is to have a seat at the table. And we all owe a debt of gratitude to people like Patti, my CEO, Bill Lohman, and others that I think all of you here today are active in the industry. And I think that's really critical. Patti's point about the absence of the independent mortgage banking industry being represented in these panels is part of why we've had this stain that continues here 13 years later. So I think we've all got to be even more progressive about asserting ourselves in the industry. We're the dominant provider of mortgages in the country, but we don't really have a voice in these panels. And I think regardless of who's running the CFPB and their political affiliation, we have to really work hard to assert ourselves. So I'm grateful for that work that people are doing. The agencies have a duty to serve. They have a duty to provide us with tools to support affordable housing, and they do a great job with it. We have to I think also, again, work harder to push these tools, make people aware of them on the street. I think was it last week? I'm looking at my notes. We partnered with Freddie Mac and did a seminar in Southern California. We had 100 real estate agents in there and making them aware of some of the affordable housing products. And it's amazing how few agents know about these products. And the agencies stand ready to partner with us to put on trainings in the marketplaces. And these are great opportunities just to take the products we already have, as Patti commented about it, and just leverage those products more. And then there's additional things I think we have to get the regulators comfortable with. Is if you're going to be more progressive and aggressive in these markets, we're going to have more defaults. They're going to be higher risk loans, and we collectively have to adapt our businesses, whether it's higher loan loss reserves allocations or other policy moves on the part of the regulators to anticipate that. One kind of a off the path, a comment about affordability and housing. I think the current social dynamic with people able to move has the potential to contribute positively to affordability. I mean, I have now hundreds of people that now work for my company who have moved from the expensive markets in California to other markets in Tennessee, in the Carolinas. And while every market out there has gone up in value, there's a ton of markets out there that are more affordable than many of the California markets. And I think that's a little nuance to the environment we're in now, is with people being able to pick up and move to other markets, that can open up some of the issues around affordability, because all my employees no longer have to live within 30 miles of Roseville, California. They're all over the country now, and this gives them an opportunity as it can many other people in our population, the prospective chance to own a home, even if they're in a high-priced market, which many of them are.
Thank you for sharing. I'll as I move over for Sanjiv to address this question, I have to say, Sanjiv, you know, having read various things noted by you or on behalf of you and listened to you on some of your presentations virtually over the last year, it's moving when I hear you talk about your view of the American dream and just your journey to this country from your native land of India. And clearly you have a deep passion about, you know, what homeownership means as, you know, the sanctuary to the development of our families and our friendships. And I just think it's interesting when I've heard you speak, just kind of your contemplative thoughts on that. So anything that you feel is valuable to add to the equation, we'd love to hear.
Thank you, Rosemary. I really appreciate that little preamble. You know, I have to tell you, Patti is a real superstar, and we are so proud to have her in the industry. Patti, I'll make sure that I attend those panels. I don't think I got the invitation, though. I think they can only handle one passionate person at a time, which is good.
I need you. We need to be together.
I have to say, when I hear the two of you together, I do think you're an incredible complementary sort of tag team on the topic.
Thank you. Yeah, but you know, look, I'll say a couple of things just to supplement what Patti said, and a couple of hopefully additional thoughts. But look, I think the role of the independent mortgage banks, absolutely. I mean, we lend 65 to 70% of the mortgages in this country. But I think, like Patti and Kurt suggested, we don't compete with the banks on this important task in front of us. We want to collaborate. Banks, I know, look, I worked all my life in banks. I came here in a non-bank about 5 years ago. And I realized that, you know, we are actually home ownership specialists. That's what we do. We focus on home ownership. And we do it across all segments, and all of us. I don't mean just Caliber, right? And I think that the distribution of banks and the capital of banks is a very important complementary resource to what we do. And I think that we should join hands to continue to do more. I also feel that, like Patti said, we have the products. We have bond programs, we have non-QM programs, we have programs from Ginny. It's a matter of just delivering those programs and making sure that, as Kurt and Patti said, people have the tolerance for us to take the risk. And by that, I don't mean risky loans. By that, because people will say, oh, here we go again. It's about making sure that when we enter a loan, that the consumer demonstrates the ability to repay. Look, I'll give you 2 examples. 2016, when I first came to Caliber from a bank to a non-bank, and I went and met Richard Codray at the CFPB, he asked me if someone had hit me on the head to come back from the payments industry back into mortgages. And I said, no. I said, in fact, Mr. Codray, I said, look, Director Codray, I said, we will do non-QM loans for those people who demonstrate the ability to repay. We will check, and then we will recheck, and we'll check again their ability to repay. I said, the reason why I was excited to come back into the industry, and I was in payments for a couple of years, the reason I was eager to come back to the industry was because people were so scared of the CFPB that there was this fear arbitrage. And I said to myself, if I leave home every day thinking I'm going to do right by my consumers, even if it's called a non-QM loan, which is a bad label, right? We were not doing low doc, we were not doing no doc, we were doing none of those things. But there was a fringe, there was a margin of society after the financial crisis that had been left behind because their credit had been damaged for no fault of theirs, That needed to be fixed. So we don't talk, we do. And I think that's really important. And if you look at the performance of that portfolio, it's been phenomenal, absolutely phenomenal. So I think between that and what our retail division does in terms of high touch, you know, again, I'll go back to this obsession that Wall Street has with technology. And I'm not saying technology is not a good thing. I think you should have high touch with high tech behind it, right? But this is a high touch business. You're talking about people's homes. And it's not just about giving them a home, it's also making sure, and this is where we are at right now in the cycle, making sure that we enable them to keep their home, because there is half the country that is about to be, that has been affected and is about to face another 12 to 24 months of low to no employment. So I think it's really, really important that we all step up to do all the right things. And look, one last thing I will say is that the overlap between underserved communities and minority communities is actually a pretty large overlap, right? And it comes with exactly the same things they need. It is, as Patti said, it is cultural. In the African American community, we've done a lot of work there with folks like Lisa Rice and so on. It's generational. People need to learn financial education. And I think that comes with a great deal of responsibility that we have as lenders, and it takes a lot of hard work. I'm just delighted to be with this group of bankers, non-bankers who think the same way, and I really feel that we still have a lot of work to do.
Thank you for the feedback. You know, it's interesting. We have our second Affordable Housing Committee meeting this Thursday through Resbog. And I don't know for you, Patti, but one of the things that is clearly coming up in a lot of the conversations that I've been involved in is just how much the key rests in the educational aspect. Everybody wants to keep fixing it through products and features. And there's just the undeniable space until we really get at the heart of educating, you know, a cultural shift, that it'll be hard to make that impact. Terry, let me move over to you. And certainly, you know, we all, you know, want to celebrate what Patti and Sanjiv are doing at the front line of that. I have to say to you, David Botany, who is head of your capital markets, the first time I heard him speak on affordable housing was probably as far back as, you know, 5-6 years ago. And I was so impacted by the secondary guy in the room, you know, being one of the emotive, most impassioned people on the subject. And, you know, to the alternative of what Patti and Sanjiv have been talking about, was focused a lot on the technical aspects of execution for it, which, you know, plays a part in some space. So I feel like I have a sense for, you know, Gild's heart around that subject matter, just because of where he leads that, you know, from an industry perspective. What do you feel from, you know, your seat and your company's seat is important to add to this equation, if any?
Oh gosh, these are such big topics and so important. And I think you definitely have to have this subject matter. It has to be a company initiative, and it has to come from the top and permeate through the whole organization, and have just really great people like Patti, Kurt, Sanjiv, David Batney at your, you know, capital markets. We've got Lisa Klicka in compliance. They're passionate about this, and we have our whole executive team is passionate about it. Like you all said, we, as an industry, the IMBs, we really do this business more than anybody. But we do need a bigger seat at the table. You know, we approach it by looking the 3 prongs: leadership, customers, employees, and they all kind of have to intertwine. And, you know, we're getting involved in a lot of the partnerships, the Affordable Housing Coalitions, NABA, NAREB, they're all great organizations, and they're helping us, you know, really put our plan together. But we're kind of looking at it a little differently, where we're starting with the customer first, and then we're going backwards and saying, okay, how can we reach that customer? What type of employee do we need? What type of leadership do we need? How do, you know, what questions should we be asking ourselves? We feel like we never do enough. And, but I think you get involved in these things, you know, and you've got to start building trust and educating. Those are the 2 key parts to this equation that I think we're all trying to solve and work on. And I think some of these organizations are really helping us, you know, move the needle. With NAMBA, they actually have this program where they take your market, all the markets you're in, and they do this whole mapping and census tract data, all this information, and they tell you how well you're doing in the markets you're serving, and where do you, where are you doing better, where do you need a lot of work, and all these things, they really do come together. And case in point, as you probably all know, we have a lot of female leadership at Guild, and because of our female leadership, naturally women come to work for Guild, and after that we end up getting more customers that are female. So it does work. If you've got to have the people that are in the communities that speak the language. And just like Guild, this whole female that we ended up getting, a higher percentage of female homeowners. It was pretty much by chance, but now we're thinking we really got to put more emphasis and have a seat at the table to make a difference with the Hispanic communities and the African American. And the other thing that we're trying is we are actually going out to HBCU colleges and doing some, we're trying some internships and scholarships. And so that's kind of one of our new initiatives. And really with our employees, we have SMART goals where every employee has to go through some type of diversity and inclusion training and courses. And that's just part of their employee evaluation every year. So we're putting a lot of efforts there. I mean, on the affordable housing, it's gonna take a village. I mean, everybody's got to get involved, and everybody's got to get involved in the industry and hit the new administration early, like Patty's saying, and get a seat at the table. That's so important, because we're going to have to all do this together. It's going to take a lot of effort on everybody's parts to make a difference. And I think the MBA Affordable Housing Task Force, there's a lot of great ideas that are going through there, like thinking about alternative forms of credit for those that don't have it, creating more down payment assistance programs, and maybe on the private side as well. That's a big deal. And we've got a foundation. We'd love to be able to kind of connect that at some point. The building, when we were talking about the lack of supply, manufactured housing, high-end manufactured housing, and really the builders, like Patti said, that we need to do something to get them back into the first-time home buyer type of market. And maybe that's including tax incentives, but all those things are things that we can make a difference as an industry.
It's amazing how broad the topic is, right? And the things that cross over. So on that note, you started to cross over into our next question. And when our panel gathered together, just for the purposes of our audience last week, we went back and forth on, is diversification of workforce and the future of the leadership in our industry part of the same question or a separate question? And we pretty collectively agreed, though, that there's a lot of crossover, that it is its own separate area of focus and need for attention. And certainly it does, correlate and have impact to the other. Sanjiv, if you wouldn't mind sharing with us just kind of what your thoughts are these days on, we clearly have still what's considered an aging workforce. We still have what's considered at the exec or senior leadership level, an older white male, more dominant sort of space in exec or senior leadership, though that is definitely shifting. And I think 3 of us of 5 of the exec leaders on the call today are women. So we could certainly say that we feel a different space or a shift to what the diversity is in that realm today, maybe than a decade ago, for sure. I'd be interested in hearing kind of what your thoughts are at an organizational level for impact on this.
Sure. Thank you, Rosemary. Look, the pressure is heavy on me being the first to answer this question, knowing that Patti is pretty, again, passionate about this, and so is Terry. And I'm just delighted to be with you guys and gals today. I feel that I'm in great company. Actually, the ratio that you mentioned, 3:5, is about the ratio I have in my leadership team. So I'm kind of used to it. In my home, it's about 2:1. So I'm completely sort of in awe of how I manage. And the most important thing though is I have a couple of thoughts on diversity which I'd like to share with you. One is, look, I've worked all over the world, and Europe, Asia, and now the United States. I'm very privileged about talking about this topic, and I would say that we are very sensitive to this as a community, and I think that is something that we really ought to feel proud about. I feel that one of the sad things that I see as an immigrant in America is that oftentimes we don't talk about with pride what we have. And I will say this, and I know it sounds kind of contrarian, just the sensitivity to this topic. I know we have a lot of work to do and a long way to go, but there are countries and economies that are not sensitive to this topic. And so I feel grateful that we are even talking about it. In business school, I learned one important lesson. I didn't learn that much, but I did learn one thing. I used to think attitude changed behavior before I went to business school. One of the things I also learned was that behavior can change attitude. And so if you behave in a certain way, you will influence people to think in a different way. I think Terry mentioned this earlier when she said, look, because Guild is, by the way, we are really scared of Guild because it's a women-dominated company. And I take that competition real seriously. Because Guild is, a women-dominated company, it tends to attract more women consumers. Absolutely right. We feel the same way because we are a diverse company. 46% of our women executive leaders, 47% of our leaders are women. And then we have, folks, and by the way, the 3 top jobs in the company, the chief head of operations, the head of technology, the chief risk officer, all 3 are women. So they control, pretty much, I'd say 2/3 of the company in terms of the workforce. Our general counsel is African-American. But the most important thing is not the numbers and not checking the boxes. The question is, did you actually respect the differences? There's a difference of opinion. There's a difference of perspective. There's a difference of culture. Patti mentioned this in the context of consumers earlier, but even in the context of employees. Did you respect those differences? And did the person on the other side feel respected for the decision, for their views and opinions? In my view, that is much bigger than just checking the box to see if you had a kaleidoscope of people on your management team and in your workforce. And by the way, I have a slightly contrarian view, Rosemary, if I may, on the context of the older leadership versus the younger population. Here is my view. Again, I could be wrong, but I'll say it anyway. My view is, look, there has to be a mix of people who saw the financial crisis in 2008 to 12 and the younger generation. Those of us who were in banks and who got the consent order, right, essentially learned banking or responsible lending in a generational way. And I feel that that lesson has not been fully taught to the younger generation. And so I am in the camp where you need a mix, where you need a mix of the experience that and we got a sledgehammer as an industry, banks and non-banks. For me to just walk away from it and not share it with the younger generation while we are building the younger generation would be an irresponsible thing to do. And now is a great time to teach the younger generation. All of our number 2s who are coming up, the 2 downs from me who are coming up the organization are in the age group of 35 to 45. We are teaching them. They are African Americans, Latinas, I might add a couple of Indians who are not considered minority technically, but folks that come from different parts of the world and different communities who all share the kaleidoscope, not just of color, race, and religion, but of experiences and points of view and attitudes, which is fundamentally changing our company. I'm really proud about, being able to talk about this and then being able to execute it in a company of our size. And again, I don't want to take any kudos for it. I'm just talking about how I think about it. So
Yeah, that was well articulated. I'll go from here just straight to Patti. Patti, what do you want to add in regards to the diversification of the workforce?
Well, first, I give 100% credit to Sanjiv because I empathize with men today that are asked that question in organizations. We happen to be quite a few women leaders on this panel. It's super rare. I think we see ourselves in organizational structure. I mean, we were the loan openers and loan processors of the 1980s, right? Now running companies, but there's still a handful of presidents and CEOs running IMBs in this country. I really feel like that's where the lack of representation happens. But on a good note, historically, we just weren't groomed to work. I mean, in the 50s, they were like, have pictures of us on the TV being excited that we opened a ketchup bottle. So we have to realize that what the men are dealing with today and really pulling us up in the organizations, and then also making sure that we're the best person for the job. Like, I want to be the best person for the job, bottom line. But it's sensitive issues around just diversification of the workforce today too. When you are a non-Hispanic trying to recruit Hispanics, it's tough. So I empathize with what's going on today in corporations. I do know Caliber's workforce and everybody on here is super diverse, but we are the very few. I don't know if Dave handpicked us all, but we are very few because I do know that we have a lot of work to do, a lot of pulling up, right? A lot of you can do this job, pull up. So I even had Rick tell me, Patti, it's time, you can do this. I'm like, no, I just want to be a broker for the rest of my life. I'm really good at it. He's like, no, you need to learn how to have warehouse lines and secondary market. And I remember somebody talking about a haircut and I'm like, what the heck is that? That was only 13 years ago. So, it really is people pulling us up. And so I think that's where we're lacking is in CEO level, president level. If you look at every major company, there really isn't very many chief operations officers that aren't women. We're the ones that these major companies built their companies on our back. I mean, I remember working at Countrywide, it was all women branch managers. So I think that this just, again, an exciting time, not a negative thing, but an exciting time, and that women need to be sympathize with the men that are running companies because they're just trying to do the best thing. They're trying to pull women up, but at the same time, get the best person for the job. And there's this playing field. So a secret that I have is that anytime you're interviewing, just have 5 people and that better be diverse, right? You have 5 candidates, and there could be a white male, black male, white female, whatever. Just that's the way to do it. And then we start to pull up. But I know that every one of us on this panel, we want to be chosen because we're the best. And so I just think that we just haven't been, groomed. I know my mom thought I was just going to be a dental hygienist. So, and that was a big deal in my family to be a Latina and a dental hygienist. So she never thought I'd be a co-founder of a major mortgage company. So again, it is kind of where we come from, and especially with Hispanics and African-American women today, our mothers were not telling us these stories of that we can be this because they themselves didn't think they could be us. So I think there's a little bit of, a lot of storytelling going on, but I know everybody's trying to do the right thing. And that to me is what's fun and exciting. This is the time now for the girls in our organizations to go, I want to be Terry. I'm going to be the next Terry. I'm going to be the next Patti and the next Rosemary. So I think it's kind of a fun time right now.
Sorry,
Thank
Kurt,
you.
nobody wants to be the next Sanjiv or Kurt.
Yeah.
We do. And one thing I think that we can say for sure is that amongst us all, because I've been in rooms with Terry and less so with Patti, but around her enough, seeing her in the industry, like we enjoy the diversity on all sides. Like we don't think that shift is supposed to be one way. I'll also say for this panel, since I was brought late into the game to help moderate, with the unfortunate circumstance with Dave. In regards to the panel, you were handpicked. I mean, Lisa Goldsmith and the board wanted this topic, and Lisa and the events committee went out to really research who would be the best executives. We also wanted to bring executives that have strong, presence in our marketplace that people would identify and relate with, but you were definitely selected for that reason. Hey, Kurt, I feel like I cannot go straight to Terry after Patti because we're on the whole sort of women thing. So we're going to move now to Kurt.
Oh.
Then we'll come back to Terry to round it off. Kurt, what do you feel in regards to diversification of workforce? I couldn't agree more. I think we would all say with what Sanjiv said about our responsibility to impart wisdom that we have learned over the seasons and the decades of the cycles to the next generation.
Yeah.
What do you see for future leaders in diversification?
Well, as the token old white guy,
that was your words, not mine. I'm certain I did not say
I'm
that.
really honored. It's like, we need one old white dude. Let's go find one.
I might say that to Bill, but I wouldn't say that to you.
I want to just pile on what both Patti and Sanjiv said. I mean, I think our industry has done a really good job dealing with, and our society is doing a great job with this. I remember going to the MBA conferences, 10 years ago, 12 years ago, and it just truly a sea of old white men. I mean, really, I took note of it. It was something I'm not just thinking about now. I remember going into it, going, God, this is a really, it was almost to the point of it making me uncomfortable. And today, if you go to the MBA conferences, it's a very different dynamic. And it's really cool to see. To me, it's kind of representative of what's taking place in our business. And even in my company. In my company 10 years ago, it was me and a few partners, and guys look like me, act like me, my age, and today, half of my executive management team are women, and 25% of the minorities, and a fair amount of that is intentional. And at the same time, we're aspiring to do what Patti suggested, is avail yourselves of more options and be intentional about including people from diverse backgrounds, and you're going to end up just pulling everybody up by just taking on those practices. It's not that different. It's also taking advantage of some of the key things that the industry offers us. Like Fannie Mae has a future housing leaders program, and we use that. They go out and they identify candidates at college, they recruit them. They don't charge us back anything, and we're able to get young leaders involved in these programs, including people, women and people with diversity, and so there are programs out there that we could avail ourselves more. And again, this is part of how we use our voice in the business. I think other interesting observations about diversity. I think again, the social dynamics have been really positive for diversity, because a company like American Pacific Mortgage, we're in the suburb of Sacramento, California, not that diverse a community, but opening up and hiring people from anywhere now has radically changed the complexion of our organization. And I look at it and then it really is encouraging, because I'm seeing people from all over the country, far more diverse, because again, we're no longer relying on a workforce that can drive to our office, which oftentimes has us unintentionally hiring people who look like us. And so I think that's been a really positive development. I mean, for our company, with respect, and then one other thing I'll touch on is the age demographics. Another thing that we've observed, and I really love the stuff that Patti's doing with your university. We also created a university, not training as many people, but it's been focused on grooming young new loan officers into the industry, and we've graduated about 100 of them thus far. We're going to graduate another 100 this year. Extremely diverse, geographically diverse. And it's things like this that just picking up on the momentum that we already have as a society and as an industry, and just continuing to make it an important part of the conversation. I think we're going to do great things in our business.
Thank you for sharing. Terry, I know you started to talk a little bit as we were on the question of affordable housing into how you see the diversification of leadership and workforce, attracting and drawing in the workforce that, serves a broader space. Anything more that you want to add? And I do think that you guys are doing some stuff on training future leaders and the next generation. We got you on mute.
Unmute. Here we go. Yeah, we have done a lot on, we're working a lot on future leaders in general. And I think the main thing, I think I talked about most of this, but it just needs to be purposeful in your company. I mean, you need to decide that you're going to make a difference and make it a company initiative and get people involved, because this is an employee engagement issue that you can just jump on and make a big deal out of it and do something really positive, and get people in your organization involved. I mean, we last month we started a VA group, and just to support veterans in recruiting, in if you have employees that support, they have a spouse in the military. We got like 200 employees that wanted to be part of this group, and I was shocked. I couldn't believe how many people wanted to have a voice and wanted to get involved. So take advantage of that. But I think being purposeful as an organization is what we need to do going forward, and make it an initiative that's important to your organization.
Thank you. I'm going to do just a call out real quickly. I think we have someone who's not on mute talking in the background. So for everybody, just a reminder, and hopefully they'll hear us. Okay, so let's go to our last thought and question here today. Sanjiv had referenced when he was talking earlier about just, the great fortune that our industry has experienced in terms of work opportunities, meaningful opportunities to serve so many people, and to have record volumes and profits and the things that come alongside. Clearly, there are many, segments and industries of our country and our world that are not experiencing the same. And so we're all feeling that it's upon us in this season to reflect on, the giving back. And that can be in so many different ways. That can be in just sort of how we do our general day in, day out customer service and business activities, as well as what we do more deeply in terms of corporate giving or community outreach. So we just would love to hear your take on that right now. And I think I'll move back to you, Kurt, if you want to share kind of what American Pacific is focused on these days and what you think about it.
Well, let me take a pause for just a second. Go to the next one. Let me come back to you.
Sure. Terry, you're up.
My door.
Mute, Terry. You're on mute.
Sorry about that. We started a foundation back in 2017 called Guild Giving Foundation. And way back, the original founder of Guild was very philanthropic, but he kind of did it personally and privately, and he did it anonymously. So nobody knew how much he supported the community, especially in San Diego and California. So in 2017, we decided to start up our own Guild Giving Foundation, and we promote community involvement with because we've got retail loan branches and loan officers. We've got 300 branches all over the country. So we support community involvement. Our employees get 2 paid days a year to, support any kind of charity that they're interested in. And we have a week, a Guild Giving Week annually, where we get all of our employees very, very engaged. We've got a scholarship program. We give out, I think, 15 scholarships a year, 4-year scholarships. We've got a match program that we've put together. So we want to get our employees to to match giving with us. This year was our 60th anniversary. We decided to do something different, and we worked with Habitat for Humanity and actually decided we were going to build a house in San Diego with them and support that with our employees, because our founder was actually a builder in San Diego. So it's a lot of it's just employee engagement and finding things where you can get your workforce really involved. And I'll tell you what, they love it. They absolutely love it. So it's a lot of fun. We do some charity golf tournaments every year across the country, and that's a big deal. We get a lot of involvement with, you know, all kinds of folks. So we're doing a lot of different types of things. But the key is it's great employee engagement, and they absolutely love it, especially the younger generation.
Thank you.
If I could come back in, Rosemarie, I'm sorry about
Yes.
that. Right when you hit that, someone stuck their head in your door and started whispering me, and it just threw off my mojo. So take them off. So
No, you're up. We understand.
thanks for that. So, you know, we it's really cool what Guild has done, and as a company, we've been always focused on giving back to our communities. We have our own foundation, and what we do is we support our branch managers, our loan officers making contributions to it, and then allowing them then to direct those contributions into areas of their communities, whether it's for the affordable housing, whether it's for you know, food banks, you know, other various charities. So it's really diverse. As a company, we don't do a great job of promoting all the things that these guys are doing. I guess it might be in the vein of what Guild does. We don't necessarily aspire to be on the front pages of the paper for all the stuff that we're doing, but we want to really encourage people to give back to their communities. So it includes time off for volunteer work. It includes time for people to take off if they want to go on a mission. There's a variety of things that we facilitate them doing through our APM Cares Foundation. Probably the thing that I'm most proud of recently that we've done is just before Christmas, we noted that all the regional food banks and the footprints that we're in have been struggling to provide enough food to their communities. And so we did a specific drive for that just a week before Christmas. And in about a 2-week span, our group raised about $400,000, and we distributed it to a whole slew of food banks across our footprint. And it was just a really cool thing to see our people stepping up. You know, we've had so much, you know, blessings in the last year as a company, and to see our people turn around and give back so much, it was really a cool thing.
There's no doubt how much people just take away from being able to contribute and give back to those things. We saw very similar things from some of the things we were doing at Christmas time, and I was not surprised by the level of engagement, but I have to say, on the other hand, maybe blown away that it definitely was, you know, reaching those levels. Patti, what would you like to share on the subject?
You know, I think we're all doing similar things. Like Terry said, it's super critical for the employees to feel they're part of something bigger than themselves. I think a little thing that I feel like we do a really good job is I personally am very, very involved in organizations. So giving of my time, I run a mentorship program for the industry. Anybody can join from any company, you know, title, escrow, loan, anything. And I give them my time to mentor newbies in the industry just around just kind of everything. I think, you know, mentorship, what any question can be asked of me. I also sit on the executive board of Big Brothers Big Sisters, and I sit on the board of Kennedy School, Harvard's Kennedy School. I didn't even go to college. I serve in the Harvard Kennedy School. But I do this because I really feel that mentorship is the most important thing we can, as leaders in our industry, offer those that are looking up and not seeing themselves. So I try to get on organizations where I can use my time to mentor others trying to look up and say, I see a Latina. She's a president of a mortgage company. So I work a lot with ethnic students. My position on the Harvard Kennedy School was so that I could be that face of entrepreneurship to Latinas at Harvard. I mean, 50% of their students that graduate Harvard go into being entrepreneurs. So I think that the employees see that, and I share my stories of what I do outside of running a major mortgage company, and we're busy, but I think that them feeling personally connected with me on what I'm doing really matters. But yeah, it was a really blessed year last year. It was blessed for every single one of them. And I think that we all spoke about it, especially when we all went on lockdown, that how is it that every single person in this industry can still be crazy busy, making more money than we ever have, and be so blessed. So fundamentally, what can we do on a personal level? So I just think it's critical. And like Terry said, it's very critical for the Gen Xers and millennials in the workforce are coming up as they've engaged in our country's policy and how impassioned they are just about how our country works. Think about how they're going to be when they come work for us, because they're going to want to know, how's your company work? So I really try to look at the future of what we're building here at NAF and think about who's going to be me and take over this company and run it. Because at some point, I've got to sell off in the sunset, right? 40 years in this business. So I keep looking at that with excitement and trying to find that next Patti.
Good luck with that.
I try.
Sanjiv, we're going to let you close this question and conversation.
I have exactly the same objective as Patti. I want to find the next Patti in my organization. And that's not a flip comment. I really would love to see Caliber run by a woman. That would be an amazing outcome. And I can tell you, there might be a few who are in the running. They're on this call, so I don't want to make them. So I think it's a self-fulfilling prophecy. But look, I want to sort of break my answer in two parts. One is, like the rest of us who've been in this industry for many years, we've reached out to communities either through United Way or through programs like Europe, like mentorship programs that Patti talked about, mentoring young adults to learn how to get their self-esteem and respect by getting jobs, and for us to be able to mentor them is really meaningful. In fact, I, as the CEO, have asked that I have an individual from Europe I can mentor. I think that would be an interesting experience for both the individual and for me. He or she may choose not to do it after a certain point of time, but it would be an interesting experience. Friends of the Barack Obama Male Leadership Academy, we've been spending a lot of time and money and effort there. Of course, we are very closely, because we are in Dallas, very closely associated with the work that's done by the Bush Foundation and the Clinton Foundation in New York, just to make sure that it's all politically balanced. But as I said, I break this answer into two parts. One is, what did we do pre-2020? And then something hit us in 2020. I know it's been much talked about in terms of a global pandemic, which just came and just rammed through a section of society. I've talked about this in each of your questions, and I'll raise this again. But the services sector, which has been either unemployed, underemployed, or furloughed, I say to myself, is it time for some of us to step back and think about the devastating impact of this tornado-like effect on people, and think about how we can redirect, or not redirect, perhaps regroup to serve another part of society that was traditionally not affected, but has been affected this time around. I don't know the answer to that, but I would ask us all. And I think Kurt touched on it a little bit, but I think that COVID wasn't just a pandemic that had devastating effects on infection rates, and of course it was terrible in terms of the death rates, but it also caused a lot of unintended consequences in just people getting displaced, families getting displaced. And I think we have to think about what we can do. to help them, because the implications in our industry are very real for people who've moved from owning to renting. Again, these are minorities that get affected much more, and folks that have gone into forbearance or difficulty making their payments, and we have to figure out and regroup and not wait for some regulation or some CARES Act. And I don't mean to demean the CARES Act, but I don't think we should be waiting for the government to put handouts. We should be stepping up to see what we can do. Frankly, I don't know the answer to it, but I am consumed by the guilt of not having an answer to that.
We're so grateful for all of you taking your time today, and for these panelists for sharing their insights for us about the future and just the things that have been on our hearts and minds that we feel are so important. I'm going to turn it back to Lisa Goldsmith. Lisa, thanks for letting me have the opportunity. It was fun for me, actually, to get to engage with all of you. We really appreciate you taking the time.
Thank you, Rosemary. You were brilliant at engaging these people in the conversation that we had.
That's too
That's
kind,
what you
but
do.
thank you.
And thank you to all of you as CEOs for participating and sharing perspective and your passion and brilliance about what you do. I think that people will walk away changed from this conversation, and that's what's our goal. And thank you all for participating. Those of you who are attendees, we hope that you really have some takeaways. So I think with that, I would call this adjourned. Would you agree, Rosemary?
Thank you. We appreciate you.
Thanks, everybody. It's been an honor.
Thank you
Thank you.
very much.
Very good.
Thank you.